All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic as always, because in today's video, what we're going to be doing is we're going to be talking about three stocks and comparing three stocks. We got TSLY, QQQY, and KLIP. ETFs, rather not stocks, as you guys I'm sure are aware. But what we're going to be doing in this video is I actually have, like I did in a previous video on TSLA, I have the total returns for these three stocks. I have TSLY, QQQY, and KLIP. What I have is their price points since January, going back on the year-to-date calendar. And so what we're going to do is we're going to compare their price points, where they're at right now, all dividends received, and I'm going to show you guys the total return. And even though I'm showing you guys the total return right now, I do want to still go through a few things, one being KLIP, because I don't believe this 2% is very fair by any means, but we're going to dive into all that in this video. So I hope you guys do enjoy. If you guys do enjoy, we're up to 3,064 subscribers. We're climbing up so many subscribers, guys. I'm absolutely so grateful for that. Our channel is growing like a little baby right here. You know, it's in hyper growth right now. So I want to say thank you guys to everyone who subscribed and everyone who's watching the videos, liking, commenting, doing your thing. Okay, beautiful. So now we got into that. I want to disclose that I do own a partial share in all three of these ETFs. So I own 10 shares of QQQY, as you can see right here. I own 78 shares of TSLY, which is roughly about $1,100-$1,200. And then I do own my biggest position, which is KLIP, at 99 shares, which is roughly about $1,700 or so. Cool. So just so you guys know that I am invested in all these companies, I'm not just, talking about them, but I actually invest in them. So that's why as well I'm saying this total return, yes, it's true that TSLY since January has had a total return of 123%, and it's true that KLIP has had only 2%, but that does not show the full picture just because I'm an investor and I obviously see the fluctuations and all the swings in that. So what I do want to say is let's go over the first one. We got TSLA, and as you can see here, what I did was I took their share price all the way back to the year-to-date calendar. So it was trading at $14.02 roughly, so that's what I put. The share price currently, it was just trading a couple minutes lower. The market's open, and that's why it's fluctuating. It was at $13.58. And so what I did was I did the total share price return, which was -3% for that period. But then when you take all the dividends that were reinvested from TSLA since the start of the year, we're talking about where are those dividends at? They're hiding from us right now, right here. So when you take all these distributions, the 99 cents, 90 cents, 82 cents, 40 cents, all these distributions and add them up, you get for this year about $7.93 paid back in dividends. And what I did here for the total return from January, subtracting the dividends, was exactly that. I took the total return, so I took the January share price of $14.02, and I subtracted this dividend level right here. And you know what, just to show you that I did that, I have my calculator up here, so I'm going to do 14.02, and I'm going to subtract that dividend amount, which was $17.93. Subtract 7.93. Imagine $17 in dividends. So we got $6.09. And when we do that math, it actually equated to 123%. At first, I'm like, wait, that makes no sense. God damn, my voice. Sorry about that today. But at first, I was like, that makes no sense, because look at this. TSLA's, it pays what? A 50% dividend. How does that even make sense that it returned 123% in less than a year and only paying a 50% dividend? Well, that's because, look at this. We obviously picked TSLY up at a great share price of, $14.02. So the share price hasn't had that much fluctuation. But the thing is, when I do 6.09 times 2, that's not even close to our current share price of $13.62 at the current time. But when I do 6.09 and I multiply that by 100 Wait, no, sorry. We need 2.23 because it's 100 over 100. We get that $13.58 that we had here as our current share price. So as you can see, TSLY actually did return 123%, which is pretty wild. Now going to our next one, which is QQQY. QQQY, for the most part, has stayed relatively flat. It is a relatively new fund. As you can see here, it's only been out for literally a couple months or so, since September 11th, so about 2 months, or not even 2 months, literally almost, no, it's been out for a month. Okay, so it's been out for a month, and the share price has gone down about 5%. It is having a bit of a down day today, a little bit of a down day, 0.42%. Over the past month, you can see that it kind of trended a bit down and went slightly up after a little bit. This also goes with the Nasdaq 100. So whatever the Nasdaq 100 kind of does in the short term is what QQQY is going to do in the short term. And obviously, you know what, this metric is, it's a very new ETF, and so it's kind of unfair to put them up against, but I just wanted to do that just because it's a popular ETF and I am also invested in it. So it's what turned literally 0.0053%, so very minuscule percent. We're looking at a total return of about $18.75. Oh, down from the current share price. Look at that. So actually, this is a negative. So it is very slightly in the negative for QQQY, but that just goes to the day-to-day fluctuations. If this went up 5 cents or so, we'd probably be positive. So it's kind of hard to judge on QQQY. But one stock that we do have a lot of history on is Mr. Clip right here. And Clip, going back to the start of the year, you could see it was actually paying about, the share price was starting at about $24.89 is what, and you know what? Actually, that could even be even higher. But we're going to start at $24.29. The current share price is now sitting at about $17.50. And that total return worked out to be negative 38%, which, everyone talks about the negative price appreciation in Clip, and obviously you see it right there, negative 38%. But Clip is a stock that I don't buy just to buy. Clip is a stock that I buy and I wait for great price opportunities. And I do believe there's a decent price opportunity now, but am I looking to buy in just because of that? Not necessarily. I want to wait for some confirmation to see a good dip in the share price, like let's say it goes underneath that $17 marker right here into the $16, that is where I'd probably buy. But the total return on Clip after all dividends paid back, going into their website right here, just to show you, these are the dividends that were paid back. They had some massive dividends. Obviously starting at 56 cents, but then $1.16, $1.09, $1.03. They went down for the current time being, just due to the fact that their share price is also declining. But that returned a total of $7.13 in dividends, something about there, which has returned about a 2% dividend. Very lackluster for Clip, a stock paying roughly 50% dividend. Yeah, 50% on the nose right there. 2% only returned when you could have really invested in TSLY and received 123%. Now, is it over? No, because I have here, May is the 5th month. Why do I have that up? That's due to the fact that, Clip, although over the past year, it's performed pretty negatively in its share price, but what I do want to show you is that you want to pick it up at great prices, and then that will hopefully offset that dividend. So let's say in May, you bought it at this buy. Look at this, at $18.20 right here. So if you were to buy Clip at $18.20 and divide it by the current share price, which is $17.49, I want to show you how the return might be a lot better than you think. So $17.49, cool. So you're looking at a negative of about 4.1%. So that's what you'd be down on the share price instead of this negative 38%. But then what would you have received in that current time period? So going down to May, what I want to do is add up all those dividends. So we got May here, the 5th. So we got 86, starting with this one. I'm so grateful that you guys are sticking with me today. My voice is just acting up in all sorts of different ways, and I do not like it. But we're cutting through with this video. So we got 86 cents plus 83 cents. No, not $83, 83 cents. Cool. Now we also got, going back here, another 83 cents and another 83 cents. So we got 0.83 plus 0.83. Cool. And now we only have one more dividend to dispel, and that is the 74. We're going to call it 75 cents. Let's give Clip the benefit of the doubt. I love giving Clip the benefit of the doubt. That's just my thing. Okay, so as you can see, we got 4.1. This is $4.01 received since May from those dividends. And as you can see, the share price obviously has not fallen from that marker that much. So what we're going to do here is we're going to take Klip's bought share price, which is $18.20 back from May, just to show you right here, back from May, and we're going to subtract $4.01. And the reason we're doing this is we're taking out those dividends. So our average cost on share with our dividends included would be about $14.10. And now just to go back to Klip's current share price, we're going to do $17.48. So we're going to divide $17.48. And you could see that it's actually returned us about a 20% return or so. Even though this is negative, just ignore that. About 19.3% return. So Klip, if you were to buy at specific times, it would actually be a decent return. And the thing is with Klip, not only does it, of course, it kind of goes down in the long term, but there's certain price points where if you bought it here and you sold it up here, you're looking at even a 5% return on that. So there's different price points and times where you could buy Klip and have good price returns as well as receiving good dividends at the same time. Now, the underlying stock for Klip is KWEB, and KWEB has performed relatively flat over the past little while. And really, it's been in a pretty big bear market for the past little while, with it being up during COVID times and then trending downwards in recent times. So as you can see here, it was all the way up to about $90 down to about $27. This is KWEB, the underlying stock or ETF for Klip, which is the China internet sector. And if there is any sort of rebound, as you can see, it's been trading flat here, but if there's any sort of rebound in KWEB's price, and we could even get back to this $45 marker, we'll see pretty decent price appreciation for Klip along with bigger dividends, which, although I'm getting pretty much an equal return right now or a little bit more, I'm definitely kind of banking and hoping on that for Klip. And if that is to happen, we'll see a pretty massive total return that could potentially even outweigh TSLY's total return. So what I want to say is I hope you guys did enjoy this video. I hope you guys got a sense of what TSLY, QQQY, and also Klip are paying in terms of not only their dividends, but their total returns, because that kind of paints a whole picture with their share price and total returns attached. So I hope you guys did enjoy this video and found it informative. If you did, and you guys want to see more like this, just hit the subscribe button. Also hit the like button. It's going to show me that you guys enjoyed this video. And also it's going to push to more people. Of course, I got to, add that little tidbit in. So I hope you guys did enjoy this video. I hope you guys take care. And I will see you guys in the next amazing video from us, hopefully. So take it easy, guys.